Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple or Spotify, please give me a 5-star rating. This content is brought to you by Uphold, which is a great platform that allows you to buy, sell, trade, and earn cryptocurrencies. I've been using Uphold for years. They're an easy-to-use platform. They're one of the exchanges that I go to for liquidity, and they still list XRP despite other exchanges delisting XRP. And you can trade between different assets very easily. You can trade between cryptocurrencies to precious metals to US stocks. So if you'd like to learn more, please visit the link in the description. All right, my friends, we got big news today. Very bullish news. And I know some folks are going to say, hey, well, why isn't the price pumping? Well, we are in a bear market. We have macroeconomic factors. So you have to understand bullish news is not always going to pump the market because it depends on the market cycle and what's happening. Now, if this news came out last year when we were still in the bull market, certainly would just send the price up. But we got big news from big brands. First up, Fidelity is considering a plan to let its individual brokerage customers trade Bitcoin, according to the Wall Street Journal. So Fidelity had launched since 2018 their arm, their subsidiary called Fidelity Digital Assets, which offered institutional crypto trading and custody services. Now they want to open it to all of their customers, which includes retail. So, the things we've been talking about for years, my OG subscribers know I've been talking about this. Charles Schwab's, the E-Trades, all these folks are going to be opening up crypto trading for their millions of clientele, their millions of customers they have acquired over the years and years of marketing and growing their business, right, guys? So crypto is, of course, the new asset class. It will be presented and marketed to folks in the institutional crowd as well as the retail crowd. And here we see the proof, right? The building is happening. And look at when this news is coming out in the bear market, right? So when a lot of retail is scared, a lot of people don't know what's going to happen, and a lot of the news about Bitcoin going to zero is coming around again. But you and I, who are well-informed and well-researched, know this is all market cycles playing out. And that's what smart money knows. That's what Fidelity and the big players know. Now's the time to build. Now's the time to make mergers, acquisitions, expansions, and get ready for the next bull market to make even more money because we have not hit full mass adoption yet. So Fidelity has more than 34.4 million individual brokerage accounts, according to the Wall Street Journal. So this would be a huge on-ramp for institutions. So this potential move follows BlackRock partnering with Coinbase to offer crypto trading to its institutional customers, a sign Wall Street continues to be attracted by crypto despite the horrible year for digital currency markets. Earlier this year, Fidelity announced plans to allow corporate clients to add Bitcoin to the 401k plans it manages for them. However, the plan has drawn criticism from the U.S. Labor Department and from multiple U.S. senators. However, guys, I do believe that once they get a Bitcoin spot ETF approved, they will be able to seamlessly integrate it into this. So Fidelity is certainly trying to find other avenues to get this exposure to their clients, but they need the ETF because they're going to meet roadblocks like the U.S. Labor Department and different folks in government may call them out. So Fidelity has more than 34.4 million individual brokerage accounts, according to the report. Mike Novogratz, CEO of crypto investment firm Galaxy Digital, said during a panel discussion at the SALT New York conference that he had heard Fidelity was moving to offer crypto to retail customers. The Monday panel was about institutional investment in the digital space. He says here's a quote, "A bird has told me, a little bird in my ear, that Fidelity is going to shift their retail customers into crypto soon enough," Novogratz said. "I hope that bird is right." This is bullish news, guys, and it's just a matter of time. And once again, if you have Fidelity as the first domino to fall, watch Charles Schwab, watch ING, watch E-Trade, and all these respective brokerages, guys. They're all coming. They're all going to set up shop. Some of them are waiting for clarity and regulations. And like I said, a spot ETF would really fast track the adoption. And I believe that will happen within the next 2 years. It's hard to say when a spot ETF is coming, but most likely it will happen before the next bull market. And I actually have some news from the Digital Chamber of Commerce and what they had to say to the SEC today. We're going to talk about that news later on. Now, next big news, Starbucks unveils its NFT loyalty program built on Polygon called Starbucks Odyssey. Huge adoption news. Once again, as I've said many times, if you own NFTs or don't own NFTs, or you don't care for NFTs, that's okay. You should still be interested in the use case and the building that's happening on the native blockchains for the tokens that many of you hold. I hold Polygon Matic. It's in my portfolio. I've been accumulating more of it in the dips. I'm bullish on it. Just, a few weeks ago, or I should say in July, we talked about Coca-Cola selecting Polygon to build their NFTs on top of it. So Polygon, as many of you may know, is this layer 2 scaling platform for Ethereum. So getting huge adoptions from big brands. You cannot deny these facts. So once again, many of you who are channel members have access to my portfolio. I got Matic in my portfolio. I will continue to accumulate in the dips. And Starbucks, clearly here, guys, showing you what the use cases are around NFTs. It goes beyond just artwork, right? So here's their website. They put a press release. Starbucks brewing revolutionary Web3 experience for its Starbucks Rewards members. And here let me give it a TLDR so you guys can see what's happening here. So Starbucks today unveils Starbucks Odyssey, a new experience powered by Web3 technology that will offer Starbucks Rewards members and Starbucks partners and employees in the United States the opportunity to earn and purchase digital collectible assets that will unlock access to new benefits and immersive coffee experiences. And that's the key, my friends: exclusivity, ownership, right? You're essentially taking it to the next level and using the blockchain crypto technology, and all these transactions are happening on the Polygon network. Now, Polygon aside, this is going to happen on the Cardano blockchain, on the XRP ledger, on the HBAR blockchain, on Algorand, right? We're headed to a multi-chain world, and this is why I'm diversified. This is why I hold those tokens in my portfolio. And like I said, I've been buying the dips from Matic. It's not financial advice. Do your own research. But based on my own research and what's happening, and being a layer 2 solution to Ethereum, I'm bullish on Polygon Matic. So Starbucks is one of the first companies to integrate non-fungible tokens with an industry-leading loyalty program at scale, while creating a digital community that will enable new ways for Starbucks to engage with its members and its partners. So huge news, my friends. And remember that this is a established brand with millions of customers worldwide. And I think they earn billions in revenue, if I'm not mistaken. There's actually another item that I wanted to share with you guys. I'm going to pull it up here. And it's from some of the folks at Chainlink who had some comments about NFTs. It was kind of dovetails together with this news. Let me pull it up here for you guys. But I hope you see what's happening, right? And here you see Polygon. They tweeted about it. This is a unique experience built on the Polygon blockchain, and huge adoption news, in my opinion. And let me pull it up here for you guys. The dude from Chainlink. Here we go. So Michael Robinson, who is at Chainlink, and by the way, I'm bullish on Chainlink. It's in my portfolio. He tweeted out the following: NFTs can be more than just static JPEGs on a blockchain. Dynamic NFTs provide a canvas for real-world utility. A few dynamic NFT use cases, and he highlights here like Tesla and all the more details that can be part of a NFT. He says the next step in the evolution of NFTs is just getting started. A dynamic NFT is an NFT that can change based on external conditions. Changes to the NFT metadata are encoded in the smart contract that updates when predefined conditions are met. NFTs can be programmed in an infinite number of ways. For example, your Tesla Model 3 from Elon Musk can be tokenized as a DNFT, a dynamic NFT, with metadata updated to reflect its service records, mileage, accident reports, market value, and more. See where this is going, my friends? This is going to go to real estate, the car industry, voting, insurance, you name it, guys. This technology is going to change the world. And once again, this is running on the native blockchain of the tokens you guys hold. Once again, it could be Polygon, Ethereum, Cardano, Algorand, HBAR, XRP Ledger. So I hope the dots are connecting here. Why I'm bullish on NFTs and the building. So here he highlighted just a house contract and maintenance and history and so forth. He says the metadata of a dynamic NFT representing your house can change to reflect maintenance history, past sales, and age. Retail stores can build robust, automatically executing loyalty reward programs by leveraging chain link services with dynamic NFTs. So Starbucks, obviously, kind of a great example. Guys, huge news, big brand, millions of customers worldwide, and this is going to boost adoption. And wait till Amazon, which has a huge network and has prime customers, wait till they jump in with their NFTs, guys. It's going to be amazing what's going to happen. Now, here we got some news that from the Digital Chamber of Commerce, Perry Ann Boring, who I've interviewed a couple times on the channel. She was on Fox today, and they released some updates around the Bitcoin spot ETF. They said a Bitcoin ETF is long past due, crypto lobbyists say in a new report. The industry is baring its teeth in a long-fought battle over spot exchange-traded funds, getting set to issue a report critical of how the regulator has handled itself. So all the guns are pointed. Well, actually, I shouldn't use that analogy because people take things differently these days. But all the efforts of the crypto industry is very much targeted towards the SEC right now and Gary Gensler. And even if you're a Bitcoin maximalist or you hate Bitcoin, if you're on either side of the aisle, you still hate Gary Gensler, right? Because the Bitcoin maximalists and the Bitcoiners are like, where is the spot ETF? And we see Gensler really not paying attention, not listening. And then you have the people on the other side who are dealing with Gary Gensler calling everything but Bitcoin a security. So we're just in a tough spot, but we should all be working together to fight the SEC. So the Chamber of Digital Commerce, a Washington, D.C. based advocacy group, commissioned a report set for release Monday that will accuse the SEC of harming U.S. investors by depriving them of a typical trading vehicle already available in other countries. Here's a quote. It has determined that the American public cannot yet handle the responsibility of familiar, cost-effective, liquid, transparent, and regulated access to the Bitcoin markets, according to the report. The SEC continues to force U.S. investors who wish to invest in this transformative asset class into unregulated or foreign alternatives. A fund following investors to easily trade Bitcoins has long been seen as a major step toward accessibility for an industry whose assets are still widely seen as overall esoteric and volatile for the general public. Such ETFs would plug the tokens into the same kind of package funds that have long allowed investors to dabble in highly tailored industry sectors, various flavors of bonds or wide stock indexes without locking their money or incurring management fees. So the digital chambers, putting the pressure here, and they said their report says the SEC's position is inconsistent with its past practices and has never budged, even as the industry sought to answer agency objections. So I'm glad that they're coming out, calling out the SEC and putting the pressure. And that's is what I keep telling you guys. Tweet, share your thoughts, contact your representatives, put out videos, put out blog posts. Your voices are being heard because we have social media and the politicians and regulators are on Twitter, right? So we're all in the same town hall right now where we can be heard and we come together, and we've seen what we did with the infrastructure bill and so forth, right? And guess what? You guys have seen the interview I've done with Tom Emmer and other members of Congress. they're recognizing that something's up here with Gensler and the SEC and all the noise and all the things people are complaining about. So keep at it, my friends. And the Digital Chamber of Commerce, they tweeted out about this. And once again, tagging the SEC, calling them out. That's very important, guys. Now, Susan Friedman of Ripple had some updates here about the big week, which has already started, but Gensler is going to be meeting. So is the head of CFTC. So she gives a bit of a rundown here. She said this week, Senate Agriculture Democrats will be holding a hearing to discuss the Digital Commodities Consumer Protection Act, which will give the CFTC oversight of spot digital markets. There's a lot to like about this bipartisan effort, but to resolve current regulatory ambiguity, the bill's proposed definition of digital commodity needs to be updated in two key ways. First, take out individual token callouts as examples of digital commodities. It does nothing to resolve the absurd and unacceptable regulatory limbo that exists for the vast majority of tokens and projects today. Second, securities are excluded from the definition of digital commodity without any clarification as to what the term means. This is why regulation by enforcement continues to persist today. The House's Digital Commodity Exchange Act tackles the issue by precisely defining which assets are excluded from the definition of digital commodity. Example, any asset that conveys an entitlement to an interest or dividend payment. A similar approach could work here too. Finally, she says, we appreciate the careful attention to crypto from the House and Senate Agriculture Committees. If these definitional issues are resolved, these bills could have real and lasting impact on consumers and industry rather than maintain the current innovation stifling status quo. It's a great write-up here and perspective on what's happening. And look, we're moving in the right direction. We're moving at snail's pace, and we have one guy who's trying to roadblock us, and that's Gary Gensler and the SEC. So we got to keep fighting. We got to keep putting out our unhappiness and our thoughts out there, guys. Use social media to your advantage. So Ron Hammond of the Blockchain Association, who I've interviewed many times on the channel, he tweeted out, this week in Congress and crypto, big week in DC for crypto policy. Two major hearings with the chairs of the CFTC and SEC, likely more reports from the White House's executive order. A common theme is taking shape. Congress is becoming proactive instead of reactive. Great news, right, my friends? First, the Senate Agricultural Democrats hearing on, Senator Debbie Stabenow, I pronounced her name right, Senator John Boozman's legislation to give the CFTC jurisdiction to regulate digital commodities. While a meaningful piece of legislation, questions still remain about the definitions, which is what Susan Friedman, said in her tweet. Number two, he says, in a welcome departure from most hearings, witnesses will include nearly all stakeholders, regulators, industry, think tanks, and academics, each with their own view and presenting to a committee that isn't as in the weeds as their Senate banking counterparts. Worth watching. I'll definitely be watching both. The other major hearing on the 15th is with SEC Chair Gary Gensler in front of the Senate Banking Committee. This is a typical oversight hearing, so everything is on the table, including crypto. Since last hearing in front of the committee, the SEC has levied several enforcement actions. He says topics likely to be covered include criticism of the SEC's regulation by enforcement approach, SEC push to have exchanges register, failure to approve a Bitcoin spot ETF, and recent efforts / comments to bring stablecoins and DeFi under SEC purview via rulemaking. Speaking of stablecoins, despite what most of the outlets are reporting, there isn't much of an update on the rumored Maxine Waters and Patrick McHenry's stablecoin bill yet. Time is running out, and each day there isn't an agreement. The chances is a 2023 play get higher. Finally, well, I shouldn't say finally, there's a lot more, but I'm going to end it on this one. A few reports from the White House's executive order on crypto have been released to the public, most notably on crypto mining, but it is likely more will be released in the coming days. This shouldn't scare folks, though, as many of these studies are just that, studies. So he continues, but obviously the big meetings with Gensler and the CFTC chairman are the big items this week. not to mention the Ethereum merge. So certainly a big week. Let's see what happens. And here I want to highlight the following. The CME is set to launch Ether options. So that's bullish, not futures, options. So allowing different folks to be able to buy Ethereum. And like I've always said, it starts with Bitcoin, then they will go down and add altcoins. Now, yes, some of these big institutional platforms, they don't want to add Algorand or Cardano or XRP or whatever because they're scared, right? The risk is out there. All of a sudden, Gary Gensler is going to come sue them. So this is a challenge. This is why I'm going to put it out there again. Call your representatives, put out content, put out your frustration, your opinion about what's happening, because it is being seen, it is being heard. And great to see that some of these big institutional legacy and institutional firms are integrating crypto, and obviously Ethereum big. And you look at the timing, right? They know what they're doing. And let's end it here by taking a look at the market. Bitcoin right now still looking strong, 22,261. Certainly there's a buy the rumor, sell the news event here on the Ethereum merge, but let's see where the price goes. I don't know what's going to happen. And we may have a crash because you also have CPI numbers coming soon and all that. We'll just have to wait and see. Nevertheless, macro view, we are on track to a next bull market, which will yield new all-time highs. Look at the charts, study the charts, and you'll see it, my friends. It's playing out. The question is, do you have the patience? The patience to wait out the bloody bear market and then take profits at the high? Or will you fall into the dumb money crowd? And I didn't make up that terminology. That is a terminology that's existed in markets before. Smart money buys the lows when blood's on the street, sells the highs. Dumb money buys the highs. That's people who move with the herd mentality, who listen to James Cramer on finance, right? They don't do their own research. They let media tell them what to do, and media plays on their fears and their euphoria, right? You can't do that, guys, if you want to make money. And I'm talking from experience. I had to learn that. So I'm sharing what I've learned. When I first got in, I didn't know what I was doing. I was new to investing as a whole. And I bought the tops. But you live and you learn. And I learned and I made adjustments and I made money in the last bull market. So hope you guys understand. I'm trying to share this knowledge so I can help somebody who's new to investing to this great opportunity to make some money. Is there risk? Of course, any investment, there's risk. This is why I keep highlighting diversify. Don't put all your eggs in one basket. I'm not telling you to hold the same amount of coins that I'm holding. I'm just saying, make sure you diversify. Maybe it's 5 coins, 6 coins, right? So that if 1 or 2 or 3 go bad, you have others that can still do well and make you money. And obviously there's nothing that moves like the crypto market, right? As far as gains. I own some stocks, and I'm telling you, there's nothing that moves like crypto, and we're still early. So it's bullish times are ahead. We just got to get through the painful bear market. Let me know what you guys think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.